Hi everyone, and welcome to our 15-388 final presentation, Stock Market Prediction using Sentiment Analysis. So let's go over some of the terms we'll be using in this report. Sentiment analysis is a technique used to extract pertinent information from textual data using natural language processing techniques. As you all know, stock market prediction has been one of the goals for quantitative analysts and data scientists alike for about a decade now. Investors have always used news and various financial reports to influence their investment decisions, and have lately even started using social media. So we thought, why not use sentiment analysis to do the very same thing? So the method we settled upon was to first identify stocks and data sources that we wanted to use, then to gather and extract the pertinent information from it, and then aggregate the data from all the sources so that we could train the model on the data we gathered. Finally, we wanted to test the feasibility of our sentiment analysis-based model against a random control.
For our data, we chose to analyze Microsoft and Apple due to the company's relative maturity as well as a strong social media presence, after which we would obtain data. We would scrape data from New York Times API, Twitter, and Google, and store them locally in order to solve the problems of API rate limits and slow API calls. Finally, the data was categorized into its different types, mainly text data and numerical data. For text data, we would analyze that using Alchemy's API in order to generate sentiment scores, and numerical values were after which normalized. Finally, we would combine the data into a data frame for model training. So on to our results. Here's a view of our random strategy, the linear SVM model, and the RBF SVM model. As we can see here, some of our models trained using the sentiment analysis technique does provide some level of outperformance compared to the random strategy and shows some promise.